Good morning to you all. Hopefully you can hear me. My name is Bonolo Khasake, and I am the head of Empower and Digital Marketing at GIB Insurance Brokers. Good morning to you all, and thank you for accepting our invite. Please note that this session will be recorded. Welcome to the launch of our new quarterly webinar series, GIB In Touch, the first of many sessions designed to keep you informed, inspired, and connected. This platform is all about empowering you, our clients, through meaningful education, reinforcing our commitment as trusted brokers, and sparking conversations that deliver genuine value and insight. We are excited to begin this journey with you. I'd like to welcome our first host of these sessions, who is Willem Lombaard, the Managing Director of Tax Risk Underwriting Managers. He is an insurance professional with an extensive experience in managing insurance businesses in South Africa and holds a Master in Business Leadership degree. Willem's held directors and management positions at various insurance businesses, including Kudos Underwriting Managers, Pin Africa Life and Insurance Companies, the Hollard Insurance Company, and Prestasi Brokers. Willem also served a term on the board of South African Insurance Association. Willem, thank you for being our first host of the GIB In Touch. Over to you.
Thank you, Bonolo. Thank you, ladies and gentlemen, for joining me. As Bonolo so kindly said, my name is Willem Lombaard. I'm the Managing Director of Tax Risk Underwriting Managers. I see there's a good selection of clients, of GIB clients and staff here today. For the staff members here today, thank you for joining us. Today's session will also count towards your product-specific training qualifications. So after the session, you will be qualified to give advice. If you have not attended one of our previous training sessions, this session will double up as your product-specific training session. The session will be exactly 1 hour, so we aim to finish at exactly 11 o'clock. After the session, I will send you an email to all in attendance with a summary of what we've been talking about and some information, so you don't need to take scrupulous notes. You will be provided with notes, so you're welcome to sit back, relax, and listen to the information. If you have any questions, by all means, send me an email and we will deal with that. Let's get into the presentation. Right, to start off with, just some role players who's involved in this business and where we fit into this picture. Of course, GIB is your insurance broker. The product is underwritten by Bright Insurance Company. It's one of the top insurance companies in South Africa. My business is called Tax Risk Underwriting Managers. An underwriting manager is an entity that has a specialist skill. We underwrite on behalf of Bright, so we determine the policy conditions, we pay the claims, we collect the premiums. But for a balance sheet and a safety and security point of view, it is the balance sheet of the insurance company that is important. And then we distribute our products through a national network of insurance brokers, of which GIB is, of course, one of our most important clients. So that's just role players, some information of who's involved in the business. The top guy there is Mr. Peter de Schmidt. He's an engineer by qualification. He spent a lot of time in the insurance industry. He's been a past director of Hollard, has been a managing director of Infinity Insurance, been on the board shareholder of LegalWise and a few other very well-known insurance companies. So a very well-placed and experienced in this insurance individual. That ugly face at the bottom, that's mine. Bonolo's already introduced me, so the less the better. The guy at the top is our local accountant. He's Mr. Clive Noland. He's the founding chairman of Noland's Accountants and Auditors. He's a well-experienced life accountant. He's been on the board of the SA Prime Property Fund. He's been instrumental in bringing in the franchise for Radisson Hotels, which he then ran until it was listed, and a very well-experienced accountant. The guy at the bottom is Professor Walter Geach. He's the head of department at the University of the Western Cape and past head of department at the University of KZN. He's the author of many books. If you're an accountant, you probably studied out of one of his textbooks at some point in time. So a very well-informed person. This is our advisory panel. The guy at the top there is a tax attorney, Dr. Daniel Erasmus. He resides in the US and he takes care of a lot of international legal cases specifically around transfer pricing and that sort of thing. He's a doctorate in taxation. So very well experienced guy. And the person at the bottom on our advisory panel is Mr. Skalk Pieterse. He's a tax attorney. He runs a very large tax legal practice in South Africa. They're based in Cape Town, Gqeberha, and then Gauteng. And the reason why I provide you with the brief CVs of our shareholders is to give you an idea of the skills that reside in our business. And these are the skills that we apply to what we do, which makes us an expert in the field, in that we have a balance between tax, legal, tax accounting, and insurance. A well-balanced, very senior team that we put at the disposal of our clients or that we implement in our business. And that gives our clients the peace of mind that they're dealing with professionals. Right, so that's it. To start the session, just a brief background of what tax risk insurance actually is, because I'm very sure that many people on this call haven't heard about a thing called tax risk insurance before. It is a fairly new insurance product in the insurance market. In fact, we're the only people in the local insurance market that offer this product. And the reason why it's becoming more and more important is we'll discuss that through the course of this morning. But of course, our clients are being exposed to tax audits and disputes from the South African services more regularly. And when there's a tax dispute, it can be very complex, it can be very expensive, and our clients often don't have the wherewithal to fight a proper battle against this big organization called the South African Revenue Service. Right, so to summarize, I'll just read what the definition of what tax risk insurance is, because it's easier that way. It's effective insurance against SARS tax audits and related disputes. If an individual, a business, or a trust is selected for audit by SARS, or if there's a dispute about an unfair tax assessment in terms of which SARS is demanding additional taxes from you, the tax risk insurance will appoint and pay for the team of tax professionals who deal with the matter, ensuring a fair tax audit and dispute outcome. Right, so that's the golden line that will run through the presentation today. We offer our clients insurance protection against the cost and the implications of a SARS tax audit and related disputes.
So you do everything right. Pay your taxes on time and maintain your records. You even have a good accountant to check and double-check your tax returns. This doesn't guarantee that you won't be audited by the South African Revenue Service. You see, no matter how perfect your tax documents are, SARS is looking for ways to increase tax revenues, so they are looking for non-compliance. And they have tons of ways to determine if you are high risk. Let me rephrase that. It doesn't matter if you aren't non-compliant. It only matters that they think that you might be. And trust me, if they are going to look through your records, the tax man is clever enough to find even the smallest error. And if they think they've found an error, they will tear apart your files. And then they hit you with a reassessment. Sometimes they don't even tell you why you were reassessed. You just get hit with a notification that you owe them additional taxes. They might even issue a garnishee order and take the money right out of your bank account. So, if SARS issues you with a reassessment, you have two options. You can pay the reassessed amount and penalties to make it go away, whether you're wrong or not. Or you can stand up to them and prove you did nothing wrong. The best chance is for you to have your accountant or tax lawyer go to battle for you, which might take weeks or months, and all that work will cost you an arm and a leg in accounting and legal fees. But there's a better way. If you are ever selected for audit by SARS, or if there is a dispute between you and SARS about an unfair reassessment whereby SARS is demanding additional taxes from you, then Tax Risk Insurance will appoint and pay for a team of highly qualified and experienced tax experts who will fight the case on your behalf without racking up tens of thousands of rands in accounting and legal fees. This team can include leading tax accountants, tax attorneys, and even your own accountant as may be required to ensure a favorable and fair tax audit and dispute outcome. It's a perfect win-win situation for everyone. So don't wait. Cover your business partners, your trusts, and yourself with our low-cost tax risk insurance, and never worry about a tax audit or dispute again. Do not submit another tax return without tax risk insurance. Speak to your broker to get a quote now. When it comes to your taxes, tax risk insurance gives you the peace of mind when you need it most. Additional information on key product features are available on the Tax Risk website, www.taxrisk.co.za. Tax Risk Underwriting Managers is an authorized financial services provider.
So the next part of this session, I'm going to give you some information about the economic environment that we operate in, and not to bore you to tears with statistics, but it's useful to create the context why tax risk insurance has become important for our clients, why it's become important for you as the business owner or the business director or the financial manager, and why it's becoming more important for you as the insurance broker to give your clients an indication of what's going on. So, and I'm just going to go through the highlights. This, of course, is the economic growth of South Africa during the past few years. As you can see there, it's been pretty flat, except for those anomalies in 2020 during COVID, where we had a contraction in the economy, and then some recovery in 2021 and 2022. But if you draw a straight line through that economic growth pattern, you'll see that the economy did not grow with in excess of 1%. This is fairly general knowledge. The economists predict that this year, in 2025, we will again not exceed the 1%. Some economists think we'll probably just get over it. Some say we will just get under it. It all depends on Mr. Trump and his tax levies that is imposed. But generally speaking, the economy has not grown significantly. In fact, the economy grows less than the population growth, which means is that it's not great for employment. We're not able to absorb the unemployed into the economy because the economic growth is not great. So we all know that, and that makes sense. And one would then reasonably expect that the amount of taxes the government is able to collect is also not growing significantly. But that's not the case. So this slide here provides you with the growth in the amount of taxes being collected over the same period. And as you can see from the green bar on your right-hand side of your screen, the amount of taxes that SARS is able to collect from the existing tax base and from a flat economy increases significantly, well in excess of what the economy is growing. So 21.7% in the first year, 9.7%, 4.2%, and 6.9%. And by all indications, the taxes collected in the current tax year will also far exceed the percentages on. So quite clearly, SARS is getting better at what they do. And that has serious implications for taxpayers because, of course, how SARS is able to extract more taxes is really just one or two ways. One is they introduced new tax categories not so long ago. For those who will remember, it's the sugar tax, increases in fuel levies, etc., etc. So new categories of tax being implemented. So the other way that SARS is able to collect more taxes is just to be more efficient at what they do, is to do more audits and to collect more taxes from the existing tax base. And clearly that's where the majority of the increase lies. To introduce new tax categories has a minimal effect on the amount of taxes being collected. The majority of this increase comes from SARS being better at what they do, which has serious implications for taxpayers. Compliance revenues where, as the name says, SARS ensures compliance. They do audits. So because in South Africa we have a self-assessment dispensation, so you as a taxpayer, you effectively tell SARS how much you owe them through e-filing, and the counterbalance to self-assessment, of course, is the audit, where SARS selects a number of taxpayers and then asks for supporting documentations to verify that what you've put into your taxes is in fact true and correct. SARS has a very sophisticated IT system, one of the best in the world. So they are very good at making sure and they're getting better at making sure that people pay their taxes as they should. That top graph shows how many audits were done in the 2023-2024 tax year. That's the latest available information. So 2 million taxpayers had some sort of audit done to them, which is up from 1.8 million in the previous year. The bottom part in that rugby ball graph shows the amount of taxes SARS has collected through compliance activities, through audits. And as you can see, there's been a significant growth in this category called compliance revenue. So we now understand the economy is flat. We understand SARS is collecting more taxes than what the economy allows. And now we start to understand where they're getting their collections from this section called compliance revenue. And one would then also expect that in compliance revenue, right, it must only be the people the tax dodgers, the tax violators. That's probably where SARS is paying their attention to. That's where all the money is coming from, right? But that's actually not the case. So this graph here shows you where the compliance revenue comes from. Which categories is SARS able to collect compliance revenue from? And you'll see from that grade segment at the bottom, which I've encircled in red, is SARS collected 20.1 billion rand of compliance revenue in the last tax year, out of a total of 260 billion rand. So just less than 10% of compliance revenue come from criminal and illicit economic activities, which that segment shows. So 20 billion rand out of the 260 billion rand is collected from the tax dodgers, the people that you will expect SARS to pay attention to. And those are generally the people you'll see in the newspaper because it's newsworthy. These are tax evaders. And it's good that SARS concentrate on that, but that makes up less than 10%. The rest of compliance revenue comes from all the other tax categories that's listed in that pie graph. I'm not going to bore you to tears, but it's generally speaking, it's the honest taxpayer like me and you. Right. So that's important for us to know that it's everybody can get audited. And it's not getting any better, right? So as I've said before, SARS attempted the 2% VAT increase in the beginning of the year, which was unsuccessful. And then when the Minister of Finance did his budget announcement in March, he announced that the South African Revenue Service will get an additional 3.5 billion rand in the current financial year and an additional 4 billion rand over the medium term. So the government has given SARS 7.5 billion rand additional to apply more resources to close that fiscal gap. The fiscal gap, of course, is the gap between what the government needs and what the government has. The second article is more recent. SARS will have to go all out to justify this massive cash injection. Kees Vetter, who's of course the commissioner of SARS, Kees Vetter says since April he's employed an additional 500 debt collectors. Another 250 will be added to the SARS payroll in June, which has now happened. Our estimate is that this should at least give us 20 billion rand. We are targeting a debt collection of the overall composite debt of 120 billion rand. So the news here is SARS is going to increase their activities. Government has given them additional money, and they've already employed 750 additional tax collectors to concentrate on that. Now, if you're in business or if you're a high net worth individual, and we see that in our claims, you will know that this increase has already started. We're getting more and more reports from our clients and from the accounting practices, from our networks, that there's a lot more activity going on in this compliance revenue segment, in these audits. And audits then often leads to, when SARS audits you and they think they found something wrong, they will issue a reassessment demanding additional taxes. And those things will need to be disputed, right? So there's certain rights and privileges that's afforded to you as a taxpayer. We'll get into some of those examples later on. But a dispute with SARS about an unfair tax reassessment need to be fought, right? You need to have the skills and the techniques available to you and the money, so by the way, to challenge SARS if they issue with a reassessment, which you deem to be unfair or which is incorrect. And that's the protection that we aim to provide you under the tax risk insurance policy to make sure your rights are protected. So we understand that most people have very good tax accountants that help you with your tax returns. which is great. You should comply. But even tax accountants grapple with the legal principles and the privileges afforded to you under law. And we wish to assist your tax practitioner to make sure that they are able to provide a very good service and make sure that you are treated fairly when SARS comes after you. So we'll get into a bit of information around that. So about the product itself. So these are the clients who can make use of our products the best. So companies, of course, the products aimed at companies, at trust, at the business owners and directors that sit around those companies, and high net worth individuals. And when we say companies, we concentrate on more the small to medium-sized enterprises. So in our definition, that's companies with an annual turnover of 100 million rand or less. We do have larger companies as clients, of course. We can insure clients up to R1 billion worth of annual turnover. But the larger companies tend to have the financial resources and the networks to fight their own battles with SARS. Right? It's the small to medium-sized enterprises. So you're very good at the business that you do. You have a tax accountant that you think everything is sorted because your tax accountant seems to know what he's doing. And then you get sideswiped by a reassessment that you did not expect. And if you're a small to medium-sized enterprise, you probably do not have the financial resources or the networks or the skills to fight a fair battle with SARS. Right? You have SARS, that's this massive organization that have the Tax Administration Act at their disposal, which they know backwards. They employ more chartered accountants than any other organization in South Africa. And the average company does not have that. So it's not a fair fight, right? The resources aren't balanced. The companies are fighting a giant. So what we're asking clients is to deposit a small amount of premium into an insurance pot. And if this happens to you, we can then, out of the insurance portfolio, bring in those skills and expertise that is equal or better than SARS. So we're able to balance those scales a little bit. I always say if you want to have a fight with a big dog, you just bring a bigger dog. And that's what we effectively offer our clients is to manage that risk that SARS might attack you, and then bring in those resources so that the skills that you are able to employ is on par with those of SARS and probably even better. So our client companies are companies. Trust, and why trust is because the South African Revenue tells us these are targets. They issue an annual report. So it's on their website. You can download it. This is not new news. This is not a secret, but so SARS tells us that they will be targeting trust. So if you're involved in trust, it's probably a good idea that you get yourself some protection. Business owners and directors, because your financial affairs are often closely intertwined with that of your business. It's also more complex, right? So you're probably a provisional taxpayer, buy and sell assets. You have some financial planning on the go, some tax avoidance strategies. Tax avoidance, of course, to be encouraged. Tax avoidance is different from tax evasion. Tax evasion is when you defraud SARS, which we won't cover. You must still pay to Caesar what's due to Caesar, but only what's due to Caesar. So if you're involved in tax planning, that's to be encouraged. It means you're looking after your financial affairs, but it's more complex than your average salaried earner. The salaried earner taxes aren't complex. SARS might call for a copy of your medical aid certificate or your life insurance or your retirement annuity deposits, or if you're working from a home office to prove that your claim for a home office is legitimate. But it's not complex. Generally speaking, copy, paste, and send, and then SARS will be happy and goes away. Salaried earners can buy the cover, but it's generally more aimed at the more complex tax categories of business owners and directors. And of course, high net worth individuals then also for the same reasons as business owners and directors. So those are target markets. Those are the people who can make use of our products the best, because you do not necessarily have access to those resources. The insurance policy can provide those to you. Right, so how does it work? As I said, you don't need to take scrupulous notes. All of these will be provided for you in a summary. So you're more than welcome to not take notes and just listen to what I have to say. So we've already discussed this. If you, your business, or your trust is ever selected for audit by SARS, or if there's a dispute about a tax reassessment in terms of which of SARS is demanding additional taxes, then we will appoint those resources to sort you out. The resources that we will appoint are those categories on your screen: accountants, auditors, tax attorneys, tax specialists, tax advisors. really horses for courses. So, and importantly here is these people that we appoint doesn't work for us, right? The people that we appoint are specialized skills that work in private industry. And the reason why that's important for our clients is that you will, to have the peace of mind that it's not a lowly paid tax practitioner that works for insurance company that we're employing. It is people in private practice that know what they're doing. They're in this business on a daily basis. They're experts in the field. So you'll have the peace of mind that you will only have the best people that will act on your behalf. And that ensures that there's a fair outcome when you have a fight with SARS. The gray part at the bottom is also very important. Your own tax accountant will be a central part of the team, and his fees will be paid for services during the claim. So your tax accountant that you currently have becomes a very important person in our life. Two reasons for that. One is there's already this trust relationship between you and your tax accountant, and we respect that trust relationship. And secondly, your tax accountant has already done all the work, right? We don't need to put it with somebody else that doesn't understand you, doesn't understand your background. Your tax accountant understands all the background, and therefore he's an important part. He forms the central part of this defense team that we will assemble to act on your behalf, and we will pay his invoice. So you will not need to worry about paying his invoice for this duration of that claim. And your tax accountant can also then be comfortable that he can put up a world-class service for you, and he doesn't need to charge you. So that's pretty much how it works. We bring a team of experts to help you out, and that'll ensure a fair outcome. These are the categories of taxes that we cover. So it's income tax, VAT disputes, employment tax disputes, of course, that's pay as you earn, capital gains tax, and then even if there's a fight in court or to the tax board, it's all included in your cover. I always say we cover almost all local taxes. When I say almost all, there's some specific taxes that we don't cover, and we'll have a look at it in a couple of minutes. And when I say local taxes, is we don't cover the international taxes. We concentrate on the overwhelming majority of taxpayers that operate locally. So if you're a multinational organization, you're probably quite large, and therefore you can fight your own battles. But also, we will protect the local leg of your businesses, but we won't protect the international legs of your businesses. So things like transfer pricing, customs and excise, double taxation agreements, etc., are not covered because that's international tax. And the reason why we take that out is proportionately the people involved in those type of business will eat up too many of the claims, too much of the claims fund, and therefore the people who's not involved in the business will pay for that in terms of their premiums. And we don't think that's fair. So we will rather have a product that's available and cost effective to the overwhelming majority of local taxpayers. So we insure almost all local taxes. So let's just see what that means. Right, so the benefits to you as the taxpayer, or if you're the broker, to your clients, it removes the uncertainty of an unexpected SARS audit or related dispute. Right, so this is an insurance policy. Insurance policy insures uncertain events. So you can insure your own car if you want to, but you know there's a risk that if you drive out your driveway, there might be an accident or somebody might steal your car. Of course, we don't wish that to happen. You probably won't, but there's a risk, and therefore you insure your car. You can make the decision to self-insure that car, or you can make the decision to ask the insurance company to insure your car. It's no different with tax risk insurance. There is this risk. Although we don't hope it and we do our best not to have it, there is this risk that there will be an audit from SARS, or that SARS will issue an unfair assessment that needs to be disputed. You, as the business owner, can decide to insure that risk yourself, i.e., if that happens, you take it on your own chin, or you can decide to pay a small premium and to have the insurance company deal with that risk. It's up to you, but of course, as insurance people, we always recommend that you take the insurance policy, especially in the current environment where we know SARS is a bit more active than they used to be. The risk is increasing for you and your business. The premiums are affordable. We'll have a look at what it costs in a while. Cover is retrospective, and there are no waiting periods. So if you take out your policy today, and next week SARS writes you a letter about an audit of your tax returns 5 years ago, you do have cover, because audits, by their definition, are retrospective. So SARS always looks backwards, never forwards. Right, so cover is retrospective, and there are no waiting periods. I must make this comment, there's a little asterisk there. If you have a current problem with SARS and you take out your policy today, then of course that won't be covered. You can't have the car accident and then buy the insurance policy, right? It doesn't work that way. So if you come into the policy, we ask those questions. We'll ask you to declare if you have any existing issues. And if you have an existing issue, we'll ring fence that issue and ask you to sort that problem out on your own accord. Let's say, for example, you have a VAT dispute with SARS, or there's a VAT issue coming into the cover. We'll ask you to sort that out. And once that's sorted out, we'll bring the cover back into the policy. So you can still buy the policy. You will have cover for the income tax and capital gains tax and all the other categories, of course. But if you come into the policy with an existing problem, there is no cover. You can't have the car accident and then take out the insurance policy. Right, so that's very important. Some of South Africa's best tax specialists are appointed to defend the claims. We've already spoken about that. We find these resources from service providers in general industry. They actually know what they're talking about. Your own accountant's fees are covered for the duration of the claim. We've spoken about that already. And then there's peace of mind when you need it most. And I know tax returns and tax in general is stressful. You submit your taxes and you hope nothing happens. And sometimes it does. So we give you the peace of mind that you'll have insurance protection if that does happen to you. What we don't cover. Right, so this is often the most important part of an insurance policy. And we state up front in the summary, in the notes that I'll provide to you, what we don't cover. What we've put here is a summary of the most important things relating to tax that we don't cover. There's, of course, more exclusions, but the other exclusions are general exclusions that you would expect from an insurance policy. For example, if you don't pay your premium, you don't have the cover. So I elected not to put those in the summary because that's generally accepted insurance exclusions, and these are most important for your tax product. Tax evasion is excluded. I've spoken about that already. So if you willfully defraud SARS, and it's easy to find it, your policy will not operate. You must continue to pay your taxes as you always have, and we cannot endorse tax evasion. Like any other insurance policy, does not cover fraud. This policy also does not cover fraud, and tax evasion in the insurance definition is fraud. Matters which predates the inception of the policy, we've spoken about that already. And so if you have an existing problem, it's not covered under the policy if it starts today. Income generated outside of South Africa, as I said, international taxes are not covered, and the bullet point below expands that a little bit. Just to put some more meat on that bone, it's international tax, customs and excise, exchange control, transfer pricing, etc. If you involve those categories of taxes, it's not covered. So income generated outside of South Africa is not covered. However, there's an exception to this. The exception is for individuals who are tax resident and they get income from elsewhere in the world. Recently, we've brought that back into cover. So, for example, if you're an IT specialist as an individual, not as a company, so it only applies to individuals, not companies. So if you're an IT specialist and you're on contract to the UK and you're getting paid in British pounds, but you're still tax resident, you pay tax to South Africa, you are covered. If you're an individual and you're on contract to Dubai for some other mining or oil-related issue, doesn't matter, and you're getting paid in US dollars, you are covered if you're an individual. And the reason for that is, in the South African context, there's plenty of individuals that fall under this category of tax. They provide their professional skills outside of the country, getting remunerated, but they are still South Africans. They're still South African tax residents, and we believe that is then valuable to bring those taxes back into the cover. So that's very important. Category of tax that we don't cover is employment tax incentives. Employment tax incentives is generally applicable to companies that's involved in labor-intensive businesses, manufacturing, farming, etc., where they capitalize on this category. So there's tax credits to be claimed if you employ young, previously unemployed people. A problem with this act, the Employment Tax Incentives Act, it was poorly written. and full of loopholes. And as industry would have it, they've taken advantage of these loopholes, and almost all people who are involved in ETI, which is the acronym, are in court, is fighting a battle with SARS because of these misinterpretation of the laws. It's become an uninsurable risk because, it will proportionally eat up too much of the tax pot, which is unfair to the general taxpayer that doesn't use this, and therefore we've excluded it from cover. We'll probably in future bring it back into cover once there's some certainty on some of these provisions through the courts, when the interpretations have been done. But there's also some talk that the Employment Tax Incentives Act will be discontinued. They will take it away. But if it stays, and if there's certainty about some of those provisions, we might bring that back into the cover. But for now, it's excluded. We also then don't cover the normal preparation of your tax returns. That's quite simple. You still have to provide your put in your normal tax returns. And that includes for the supply for routine supporting documentations, which SARS calls a verification. Verification is when you submit your taxes, and SARS calls for supporting documentation to check if what you've put in is actually correct. So if you're an individual, it might be medical aid certificates, travel logs, that sort of thing. It's really copy, paste, and send. If you're a business, it might be your trial balance, copy of some invoices, might be your payroll, or whatever the situation might be. So it's just supporting documentation, and that's part of your normal tax-paying obligation if SARS calls for this information to provide it. Right, it should be readily available to you because you've used that information, or your tax practitioner used that information to get to your final tax return, and therefore it's not covered. It's what comes after that. Right, so when there's a dispute or SARS is coming in for an audit, that's when you start getting covered. So we cover you for the car accident, not for the car service, if we can put it that way. And we don't pay you for actual back taxes, interest, and penalties. So in the final analysis, if we've gone through this thing and we see that you do owe SARS money, then we will go to you and say SARS is actually correct. You did underpay your taxes. In the overwhelming majority of the cases, it's because of a human error or a misinterpretation, which happens, and you will still have the cover. So we'll go to you and say, please pay your taxes. And that includes interest and penalties, which SARS has legitimately imposed on you for those things. And I say legitimately because SARS must behave according to reasonability and Tax Administration Act and PAJA and all the other constitutionalities that sits around that. And we will negotiate with SARS. It's part of the service. And we're often able to successfully get better terms or nullify the interest and penalties, especially if it's a first-time offense, especially if it's an obvious error or oversight. Then we're often successful in getting these things done. But that's part of the service. We will make sure SARS behaves. We'll negotiate. But if there's legitimate taxes, interest, and penalties, we will ask you to pay those. Your tax policy, your tax risk insurance policy is a defense policy. You can't just underpay SARS and then expect your insurance policy to pick up the difference. Right. Here's an example. So this is a middle-of-the-road example. It's from a few years back. It's a smallish company. I think their turnover was 25 million rand. They have a very good tax accountant that does their taxes. We know them very well. They submitted their taxes and they got this assessment from SARS that says you owe me 604,000 rand. For a small company, this is a lot of money. The accountant tried to lodge disputes. SARS says, pay now, argue later, because they can. This is allowed in terms of the Tax Administration Act. And so they were nowhere. They didn't understand where this came from. 604,000 rand would put them into liquidation. That would be 15 people without a job. So really a stressful situation for our client. She then submitted a claim to us. We evaluated what was on the go. We then appointed these tax attorneys. This is what one of their letters looks like, just an example. Two things went wrong here. We did not contest. We did not try and figure out the amount of 604,000 rand. In fact, the amount never came into the equation. We found that SARS has acted unfairly in terms of the Tax Administration Act and the Promotion of Administrative Justice Act. And people don't know their rights because we're not experts in the tax acts. The accountants generally also aren't. They're not trained as lawyers. It's not their forte. So tax accountants tend to argue the amount, and tax lawyers tend to argue the principles. So the principle here is in leading up to this assessment, SARS asked for verifications, supporting documentations, which the client then provided. In fact, SARS asked for quite a lot of information So the client agreed with SARS to email these verifications, the supporting documentations, in batches. It was too big to upload via e-filings, too much information. So she emailed it in batches during the course of the afternoon, and the very next morning she's got this assessment. So it's quite obvious that SARS did not pay attention to the information that was put in front of them, right? They've called for the information, it was provided for them, and there's no way on this planet that SARS could have scrutinized that bulk of information in the course of the evening before they issued this assessment. And that's wrong. There's no way that SARS can issue you an assessment without paying due attention to the information that was put in front of them. There's case law around that, so we know that's wrong, and we know the courts have pronounced on it already. So that was the one issue. The second issue, when an audit happens, SARS must keep you up to date. It's a requirement in terms of the Tax Administration Act and in terms of the Promotion of Administrative Justice Act that you must stay informed. You cannot owe the state money and you don't know why. It's fundamentally unfair in a constitutional democracy. And so in terms of the Act, is once SARS is finished with the audit, they must provide you with what's called a letter of findings in terms of Section 42 of the Tax Administration Act. A letter of findings effectively tells you as the taxpayer what SARS has done, what they found, and the fact that they think you owe them taxes. They must then give you 21 working days to respond to that letter of findings, which is your right of reply, before they issue this assessment. And we find that very often, as is the case in this instance, SARS doesn't issue a letter of findings, does issue you an assessment, thereby putting the ball in your court to go prove your innocence without knowing the reasons. And that's fundamentally unfair, right? So we reminded SARS that they've violated the taxpayers' rights by not following procedures. As I said, this is something that taxpayers like you and me, we don't know our rights because it's not our wheelhouse. This is not something that we do regularly, and it requires the assistance of tax attorneys to deal with this matter. So we've reminded SARS of this matter. It went up and down, as it usually do, through the legal departments with the help of the client's tax advisor. And then a couple of months later, a few months later, there was a Christmas period in between. We received this from SARS. It says, the outcome of the objection, the South African Revenue Service has considered your notice of objection dated 2018. Your objection against the 2018 tax return has been allowed. Has been allowed means that you won the fight. SARS agrees with your points. And remember I said we never contested how they got to the 604,000. In fact, to this day, we don't know how SARS got to the 604,000. I suppose you could sue them for how they got to that number, but it would be of no consequence. It would be good money after bad because the taxpayer won their case and they then got a tax assessment back. It's not this one. They got a tax assessment back from SARS where SARS owes them 599,000 Rand, which is, by the way, the amount of money that they were expecting when they submitted their tax return in the first instance. So a very good outcome for the client, clearly relieved. And as I said, this is a middle of the road type of case for us that we typically fight. Can get quite big, can be quite small. So this is one of our larger clients where SARS is demanding 12.7 million Rand. Clearly a larger organization, bigger problems. The client pays more premium, so we're able to deal with that. But it can get quite big. The other problem, if it gets quite small, if SARS says you owes me 30,000 Rand, of course, the cost of to pay your tax attorney or your tax accountant to sort out this smaller amount eventually ends up to be more than what the actual payment to SARS is. And people end up just paying SARS because it's cheaper than paying your accountant to sort out the matter, which is fundamentally unfair. So you can buy insurance against that. Right. So those are the examples. The last part of my presentation, I'm going to show you what an application form looks like, how you apply for cover and what it costs. So this is what an application form looks like. It's really a one page. It doesn't take a lot of time to fill it in. It's the same application form. Doesn't matter if you're an individual, a business, or a trust. The second page of the application form is our rates and indemnity limits. So you can determine for yourself what the premiums are. We'll have a look at that shortly. And the front cover of the application form is a summary of what we've just spoken about. So it gives you all the information, what's covered, what's not covered. You don't need to guess your way around it. And if you guess your way around it, you're uncertain, you always ask me or your broker at GIB. All right, so this, as I said, this is what an application form looks like. The top part is where you put your information. the bottom part is what's called underwriting information. So we ask 7 questions about your current state of your taxes to make sure that we understand the risk better. That's the role of insurance, is to underwrite risk so that we understand the risk better. And if there's a problem, we can address that problem, right? So it's basic yes and no answers about your tax affairs. We ask you to disclose honestly. It's in terms of the contract of insurance, you must disclose information to us fairly so that we can understand the risk and then decide if we want to take on that risk, including information that you think is relevant that we haven't asked. So it's important for full disclosure. And why that's important is that we can help you understand your risk better. As I said, same application form. On the top right-hand corner, you tick if you're an individual company or a trading trust or holding trust. We'll talk about the 2 different types of trust shortly. Importantly here is each taxpayer gets their own policy. So if you're a company and there's two companies in your group, holding company, maybe an operating company, there's a trust that sits alongside it, and you 2 directors or 2 shareholders, each of those taxpayers buy cover separately. In that instance, you can then select who has cover. So you don't need to cover everybody. You select who has cover, and those who need cover will fill out an application form. So maybe you don't want the holding company to be covered, but the operating company. So you fill out 1 application form for the operating company and 2 for the directors and 1 for the trust. It's up to you. It's your discretion. Right. So this is what the premiums look like. As I said, it's the 3rd page on your application form. So you can have a look at what your own premiums are. The top one are for companies. The top middle one is for individuals. The bottom middle one is for trading trusts. Trading trust is when you use your trust as a business. So there's buying and selling or trading going through there. And the bottom one is for passive holding trust, is when you don't use your trust for business. It's there to protect the assets for future generations. There might be transactions going through there like beneficiary payments or auditing fees or interest payments, bank fees, and that sort of thing. But it's not a business. It's an asset holding trust. So let's drill down on what the cost of the companies and the individuals are. So that's the companies and the individuals. For companies, we look at your annual turnover in the last financial year. And companies include sole proprietors, sole traders. It's also a company because your risks are similar. So if you're a small company of less than 3 million rand, your premium is 265 rand a month, which, considering the problems that small companies have and the lack of resources, it's cheap at the price. If you're a larger company of, let's say, between 50 million and 100 million rand annual turnover, your premium is 1,540 rand a month. It's still cheap considering the problem as a large organization that you can run into. If you're a company of more than 100 million rand per year, then you still fill in the same application form. You'll see on that application form, there's space for what your annual turnover is. You'll then send it to us, and we'll do some special premium rating and underwriting for you. So for the larger companies, we have a closer look at what the nature of the risk is, and then we'll get back to you to confirm your premium and if there are any additional underwriting that's required. But for the 100 million rand and smaller, standard pricing. The right-hand side of the column shows you what the limits of your cover is. So let's take the 50 million to 100 million rand company again. Your annual aggregate indemnity limit, as you'll see there in the green part, your annual aggregate indemnity limit, limited to 100 hours for any one claim. We'll get to that now. So your annual limit is 1 million rand per year. Million rand meaning that's the amount of money we'll spend on these accountants and lawyers to sort out your case, right? That's the amount of money that we spend. And the limit over a year for that size of company, it's 1 million rand a year or 300 hours, whichever is the lesser. So we have this double indemnity limit ceiling. So 1 million a year or 300 hours, so the number of hours these lawyers or accountants spend on you, whichever is the lesser. And the reason why we have this double indemnity limit ceilings is not all lawyers and accountants charges the same hourly rate. So if you're a Sandton tax attorney, your rate is a lot higher than if you're a tax accountant in Pofadder. So therefore, we have these double indemnity limits, whichever is the lesser. So if we reach in a year's time, the 1 million rand or 300 hours, then your cover stops. I must say only once in our 10-year existence have we exceeded these levels. So we put them very high to make sure we can sort you out from cradle to grave. The one case was a massively complex one, which just dragged out, not because mainly the client wasn't cooperating that much. And when we reached the indemnity limit, we offered the client to continue with the issue at his own discretion at the preferential rate we get from our service providers. So he still won. And then back to the top, limited to 100 hours for any one claim. So one claim, it might be, let's call it a VAT audit, can't be more than 100 hours for any one claim in over a period of a year, R1 million or 300 hours in total. So it means that you can claim more than once a year, as long as one claim is not more than 100 hours, and collectively they're not more than 300 hours or R1 million in a year. So I'm sure that makes sense. For individuals at the bottom here, we use your taxable income. So less than, if your taxable income in the last financial year is less than R2 million, it's 249 Rand a month. 2 to 5 is 355 Rand a month. And the indemnity limits, again, is on the right-hand side. For individuals, the limit is 50 Rand per any one claim. For trusts, so trading trust is at the top. There's the definition. As I said, trading trust is when you use it as a business. As you can see, the rates are similarly to that of a company, and the indemnity limits are similarly to that of a company. Slightly different, but similar, so it's there for you to read. If it's a passive holding trust, so there's just assets in their properties or equities, it's a flat rate of 292 Rand a month, irrespective of the amount of assets in there. So that's it. That's it for my song and dance. We have 2 minutes left. In the last 2 minutes, I'd like to give you some communication details. So if this is something that you would need for your business or for yourself, and as I said, the need for it is increasing. We see that in the amount of applications we're getting and the amount of claims we're paying. By all means, fill out an application form. I'll be sending it to you via email. You can return it to GIB, or speak to your GIB representative. There's the email address. It's info@gib.co.za. You can go to my website. There's a bunch of more information on my website, www.taxrisk.co.za. So you can get all the information that you need from my website. You're also welcome to send me an email. There's my email address. It's quite straightforward. It's willem@taxrisk.co.za. And there's my cell phone number. By all means, if there's something you don't know or you're uncertain about, give me a shout. I'm more than willing to help, or speak to your GIB representative. They're always up for help. And I think that's about it for today. So thank you for your time. Bonolo, I know you've had a connection problem earlier this morning. If you're online, just give me an indication. If you're still with us.
Yes, I am.
All right, great.
Yes, I'm back. I managed to log back in. Willem, once again, thank you so much for hosting today's session and for sharing such valuable insights. I mean, your expertise and thoughtful moderation made the discussion truly, truly impactful. And to our audience, thank you for spending a part of your morning with us. And we look forward to hosting you at our next session, which will be in the first quarter of 2026. So please keep a lookout for the invite. Have a lovely day further, and see you at our next session. Thank you to you all.